Go ahead.
Yeah, so I work for Lincoln Financial, which if anybody is a football fan or an Eagles fan, they sponsor the Eagle Stadium. So what they do is they sell different financial products, include, if anybody's taken any sort of finance class, an annuity is just you pay a lump sum up front and get a cash flow. Well, a variable annuity is basically if you were to invest that money into a mutual fund, the variable annuity part means there's like guarantees, right? So like the most simple version would be you invest, X amount into the S&P and you pay a fee to Lincoln every year to guarantee you don't lose any money. So basically my whole division of market risk management does the the analysis and ultimately the hedging to satisfy all those guarantees. So there's various market linked products. So, they can have all different types of guarantees. Like you could make sure you don't lose your principal. You could be comfortable going down 5%. You could, say, I'm willing to give up gains above 10% for a lower fee. Like, it's a little bit customizable and you can invest in, all these different mutual funds. So basically there's a whole team that's called market risk management that takes Lincoln's liabilities, which are what they owe policyholders either in life insurance or variable annuities, and ultimately comes up with what derivative products Lincoln needs to trade to satisfy all of those to offset those liabilities. And ultimately, Lincoln wants to just collect the fee and not be exposed to any market risk. So there's a whole team that does this. I'm a trader, so I'm at the very end of the sort of line. So everyone, there's analysts, quantitative analysts that do all these things up to us, and then basically me and my team get a trade request that says do this, and we execute, and we also do some quantitative analysis, some we're trying to get a little more strategic within our mandate, and also we have to do reporting. So there's some of the quantitative analysis and some just trading, but the trading itself is, I mean, it's not like we have an algorithm. We're just we go out and we get the best price that the market offers. So yeah, so it's super interesting. It's much more complicated than I ever anticipated going into this job. And I guess the number one thing is if people aren't looking at those types of jobs and those types of companies, you totally should. Like, I know it's super tempting to be like, oh, I want to be a quant, right? I want to be a proper, quantitative trader or whatever. Um, but the reality is there's just not that many jobs that do that. I mean, it's just a very small slice of the financial ecosystem, and you know the jobs are more likely going to be at the big banks, at all banks, not just big banks, and insurance companies and things like that. So that would be like my number one, I guess, advice is don't be hung up on being a proper quant or something like that. It's just that guy Gappy, that he's sort of an internet popular quant guy. He wrote this whole thing back in February, oh, so you want to get a job as a quant, and he did a back of an envelope combination that there's maybe 1,000 job openings a year total for everybody. So it's a small part of the financial world, and um, you know everyone should definitely open their minds to other things. So that's sort of my spiel. Questions? Do you want me to?
Sorry, the audio was on. Oliver?
So being within the Philadelphia area, do you see recently in your time here and then in the past year, has there been like an increase in roles and quantitative roles, or do you think looking elsewhere, there's going to be more potential for that?
I mean, that was one of the things for me. I'm from Philadelphia. I bought a house here in 2021. I'm married, so I really didn't want to leave, but I looked elsewhere, and that's one of the things that was part of it for me is there are few financial institutions in the Philadelphia area. So I definitely wouldn't by any means limit your search. I mean, I had a bunch of interviews with a company based out of Jersey City, so I was ready to move. I think definitely can't limit yourself geographically. Um, yeah, I mean that's the short answer. And for better or worse, most of the jobs are in New York or Chicago or even London. Um, so if you're young and single, for sure, be willing to move anywhere. That's no question.
And how is the market right now? Because Aegis is telling me that it's a little bit tough, and Noah as well. Like they're
Yeah, I
taking
mean,
forever to get back to people. They're taking a long time.
yeah, I mean, it seems tough. I mean, it seems like there's real quick. I'm gonna send something in the chat, which
Yeah.
I looked on the other day. I looked on Bloomberg and just for a list of like Lincoln Financial's peers or competitors. So most of these companies I don't know anything about. I just pulled it from Bloomberg, but definitely everyone should look into these companies and see if there's openings. But yeah, I mean, it seems like it's a tough market. I mean, I was lucky to get something. I mean, it seems like you can't be super picky. I don't know how long term the trend is. I have no idea. But I think like I said, I think opening your purview, and the other thing is, like I said, like proper quant firms are a really small piece of the pie, but all of the traditional banks and financial institutions, like even if they don't have quant positions, like finance is an inherently quantitative discipline. So like, all of the sales and trading roles, like you guys should be applying to them. All the banks have sales and trading program. I think they would look fondly upon an MFE, especially compared to a bachelor's in finance or something like that. I know the counterparties we deal with, they have brought on a couple people, in September or whatever. I mean, it's not a ton, but all of the banks have different divisions, and that's definitely where I would look. Sorry, one second. Yeah, but I mean, it seems like especially in the sort of more tech side of things have gotten especially tough.
Oh, what would you like recommend as like, because like I'm assuming all of us, or at least I guess us three, are mainly focusing like our now first steps of actually applying to jobs. Do you have any kind of like recommendation or advice on best ways to kind of secure kind of not just even offers, but just interviews in general and like kind of
I mean, I think, I'm sure Professor Zerara has said this a trillion times, but um, networking. I mean, the job I got, I ended up getting because I have a relative at Lincoln who, got me. I had an internship that last summer and did all right there. And then, it took a while, but and it wasn't magic, right? I had to wait for an opening to work, but that kind of connection, I think, one anecdote I like to tell is like I followed this guy on Twitter named Corey Hoffstein, who's like, one of these quant social media guys. And, one day he tweeted like, gonna be at some Philadelphia hotel for a conference, like feel free to, and, anybody's free to come, just you have to register, it's free. So, I wasn't doing anything. I don't know, maybe I skipped class or something, but, I just showed up and there was like, maybe it wasn't a networking event. So there's maybe, 25 practitioners there, and I talked to people, and I ended up getting invited to sort of a networking event, a very intimate networking event at a sort of, quant hedge fund type thing. And, long story short, like I said, they didn't have an opening, but that was, that's the type of thing you have to do. I would think, go out of your way to go to any meetings, any conferences. I think that's always important. Meet people, follow up, just I think that's number one. And then I guess skills wise, I think it's always helpful to keep up with markets and have an idea what's going on in the world. I think that's, maybe not more important than technical skills, but it's important. Once you actually start a job, it's going to be sort of given at you, have a clue what's going on.
Sorry, just even to follow up on that, what is like the best ways to kind of like, I guess, continue like, to follow up and like learn about like the market? Like what's like probably like your best way to like do that, I guess?
Yeah, I mean, read the Wall Street Journal, Financial Times, Bloomberg. I mean, one of the things, not that it's either here nor there, but like what in the period that I was applying for jobs and whatever, like when I'd get burnt, didn't really feel like doing anything, feeling dejected, I would just force myself to watch Bloomberg TV. Like it doesn't take any effort. You're watching TV, but like, you're actively, if not passively, learning something. So, I think Bloomberg TV is great. It's sort of, they're pretty good. They're pretty sharp. I listen to Odd Lots podcast. I don't know if you guys are familiar with that. I try to keep up with that. That's not particularly news, but that has some interesting conversations. So it doesn't have to be, reading textbooks or even reading newspapers, but, I think keeping up with that is good. Sorry, 1 second. Yeah.
I'm sorry, also just to, I guess it's kind of like a completely different question, just to shift gears. Like, do you feel like, I guess, like the whole idea of like more AI driven stuff and like the language learning models, like all that, like with ChatGPT, like how has that impacted? Do you think like that's impacted the market to make it now harder to get jobs, or like what do you like kind of think that maybe has had any kind of effect?
I mean, I think, I think at some of the, I guess first, something I wanted to mention today is personally, I wouldn't spend time working on that. I don't know. I think like unless you're going to be like a proper, a proper quant trader, quant researcher at Citadel or whatever, I don't think that's the type of skills you should be working on. Like, I think alpha generation in general, like the reality is it's unlikely that those jobs are going to be opened up, right? Like I think you're much better off leaning into more of the finance, even the math, things like that, rather than the sort of cutting edge AI stuff, because anything, I mean, the cutting edge, I don't even know what the cutting edge is, right? Like these people have proprietary this and that. I know that's not really your question. Your question is more about whether like, AI is replacing junior people, right? I don't know. I think at the banks, not really. I mean, banks are offering a service, right? Like there's 5 to 10 people in all of my Bloomberg chats with banks. It's not like you can replace people. So I think, I think it may be, I think for software engineering on the more tech side, that might be more of a thing where you don't need a junior coder anymore. I mean, maybe at like investment banks where people are just, I don't know, doing Excel stuff, maybe that's true. But I think, I think in like the bank sales and trading world, I don't think that's really necessarily a thing yet. I mean, on my team, I know we've just hired one person, we're hiring a little bit. But I think, it's more so that there's sort of, a supply demand imbalance, and it's just, companies, there's people that with experience that are out of work, and it's like, if you can hire someone with 2, 3, 5 years of experience, it's like, it's hard to not do that. I don't know if that answers your question, but
I was just curious to hear your thoughts. It's really it.
yeah.
Sam, actually, like especially for the insurance industry, like what kind of, as you mentioned, right, related to any kind of you're working as a trader, investing annuities. So what are the job roles actually in the industry, insurance industry to be specific?
Yeah, it's a good question. So I know at Lincoln we call things, either, some combination quantitative derivative specialist, quantitative analyst, quantitative, derivative, blah, blah, blah. I mean, some combination of quantitative derivative and something else. And I would assume that some of these banks have similar roles. And I guess, yeah, maybe to delve into some of the roles, at least that I see on my side. So like, there's a team that is a little bit more modeling driven. So they're mostly coding in C++. There's a team that is more, quantitative trading strategy. That's sort of the team before mine, that they're mostly doing, Python. But yeah, I mean, I think I would look at these banks and, some combination of risk, market risk management, quantitative analysis, derivatives, anything like that. There's I don't know. I would think some of these insurance companies outsource the trading and even maybe some of the analysis, but anyone that does it in-house will have different, quantitative derivative, blah, blah, blah. Or they might not call it that. They might call it like a market risk analyst or something like that. But yeah, don't think that those jobs are, boring or whatever. Like, they're doing real interesting quantitative work. They're coding, we're dealing with derivative Greeks. So, I know when I was in your position, I said, oh, I don't want to be in risk management. I don't want to work for an insurance company, but, there's, they're interesting, fulfilling roles. And I would definitely look at that.
All right. Like you mentioned that the modeling team is usually developing models into C++ and operations team is using Python to do it. Like, can you elaborate on that? Like being I want to be also work into risk industry. So how can I prepare well for that? So
Yeah, I mean, I think
and model development are two different things, but like how are they two engaged with each other then?
Yeah, I mean, I guess now that I think about it, I think learning C++ is definitely if there's one sort of actionable skill you can learn, that might be the answer rather than learning some machine learning, blah, blah, blah. I guess it's funny you ask. I mean, the C++ actually ends up sort of being the back end for Excel more so than anything, and the Python is more so for ad hoc analysis. But ultimately, a lot of stuff is ran out of Excel with the C++ in the background. And that's another thing that I had no idea would be a thing, is how much, I guess, Excel and VBA. I sort of had to learn VBA on the job, which is a horrible, awful coding language, but unfortunately it's connected to Excel. But yeah, sorry, what was your actual question? Sorry.
Like I understand because everything, even Python is just a language which has different libraries, but in the back end, even it is running through C++, right? So, and development at all of the firms, like when I spoke with a lot of guys, all of them are using C++. Nobody's using Python. Most of them are like, for any kind of development, everybody's using C++. But like, how are the two link and being like, I am seeking job, what should I focus more on then? Because that goes towards development side, Python comes towards operation side. And I want to work towards risk side. So what should I focus on, to be honest? That is the question.
Yeah, I think you're exactly right. And I would say, try to, focus on C++. I think, that's a skill that will get you, sort of differentiate you. I mean, there's jobs that I either applied to and didn't get, or didn't even apply to because it said, have to know C++. So I think, I knew some Python. I'd feel comfortable with that. And I still feel comfortable in Python, but yeah, I mean, I think short answer is C++, and I think you're right that the operation side is more C++, where the, sort of more ad hoc, non-production things are in Python.
Hello, Sam.
Hello.
Thank you so much for telling us to keep an open mind and also like consider other roles. Speaking of which, my question is, are there any innovative or emerging risk modeling techniques that you see gaining traction, especially with risk management?
I don't think necessarily innovative. I mean, when we're talking about modeling, I think a lot of the issue is actually speed, for lack of a better term, right? Like, at least from our side, right? Like the sort of, I guess, difficulty is, we have all of these various, policies, and they have different, there's different positions in each fund. So it's, I guess it's, long story short, a data problem, not a problem, but I don't think there's anything particularly innovative. I mean, we're using the traditional Black-Scholes Greeks, calculating those, things like that. And I don't think calculating Greeks more accurately really does anything for anyone. But that's an actually interesting point. Someone in my general bigger team just did a project where they actually used some machine learning to sort of make one of those processes more efficient. So that's maybe, I think there is some machine learning applications there. And I don't think you shouldn't learn machine learning. I think it's sort of a new sort of basic thing that people should know. I'm more saying, I was previously saying, I think focusing on the alpha generation part of it has less of an application in the real world. But machine learning, I think that's sort of expected that you at least have some familiarity with that, and that's the type of thing that maybe I'm sure a lot of these companies, including Lincoln, have been doing it one way for however many years, and there's definitely a lot of them are sort of rigorous in their what they can do, but I think theoretically there's probably somewhere to be innovative.
Hey, Sam, when you say you're hedging, what are you using to hedge?
Yeah, that's a good question. Yeah, I guess I didn't really describe the specifics of the role. So, we do everything. So, we're a pure derivatives trading desk. So, we're not doing any straight up equities or bonds or anything, but we do, we buy and sell options, just traditional vanilla call put options on either single names or indexes. We do swaps, so a decent amount of total return swaps on S&P and other indexes. We do some forwards. We do futures every day. We'll do cross currency swaps. We'll do bond. We did a bond forward the other day. It really is like we've really done a little bit of everything. Like it's kind of funny. Like 2 weeks after I started this job, I emailed Professor Brockman because I was like, we literally used everything I learned in your class in like the first 2 weeks. I was like, that I wanted to tell him that, he did a great job preparing me and us because, we really do everything, options, futures, and other derivatives, as the book is called. So yeah, we do a little bit of a lot of different things.
Any more questions, Fred?
Yeah, I want to ask, like, do you really have to be very entrepreneurial with your skills, or the task you are given on the desk is enough for you to succeed in the job?
Sorry, can someone repeat that?
Do you have to be entrepreneurial with your skills? Do you have to be entrepreneurial with your skills, or like the job task you are given is enough for you to succeed on your desk?
I guess he wants to know if you need to be entrepreneurial.
Yeah, I mean,
Work or
Yeah, I mean, we have sort of an interesting, you know, an interesting situation where like, you know, we have what we need to do every day, and you know, our sort of specific trading. And then beyond that, you know, I've only been there a few months, but we're sort of constantly working on other projects. And yeah, there's certainly an opportunity, like, to be, I guess, I don't know if entrepreneurial is the right word, but to think outside the box, to say, to research different things, to try different back testing. Yeah, for sure. I mean, it's definitely not, you show up, do the same thing every day. There's definitely plenty of opportunity for creativity and things like that. Yeah.
Okay. Sam,
Yeah.
thank you very much.
Yeah, and like I said, check the LinkedIn, if you see a job posting on LinkedIn that is